Hello everyone, welcome to Align with Your Business. Today we're going to look at a profit and loss statement or a P&L. But before we do that, we're going to get ourselves ready to learn about the P&L. First thing we're going to do is we're going to switch on. So we're going to have two fingers on this side and thumb, and we're going to go down from the collarbone just about an inch. You'll feel a bit of a dip there, so we'll give that a bit of a rub. And the other hand, on the tummy button. And when you're ready, you need to listen to your body when you're ready, and we'll swap hands. Okay, the second part of switching on is two fingers and thumb again. And the two fingers are going to go on top of the lip, under the nose, and thumb is underneath the bottom lip, and we're going to give that a rub like that, and the other hand on the tummy button again. And again, listening to your body. When you're ready, we'll swap hands. Don't forget your hand on your tummy button. Okay, this one always gets a giggle out from my son. So again, hand on your tummy button, and the other hand we're going to give our tailbone a rub. Again, when you're ready, we'll swap hands. Okay, so when you're ready, we will now go into the next part, and hands down to your pubic bone, and we're going to take a deep breath in as we raise up our hands to our top, just above our top lip. Okay, so raising up, deep breath in, let it all out, and back to our pubic bone, and back in. Do this as many times as you feel is necessary. Okay, and the last one is sipping water. It's very important for the brain to be hydrated. So just grab a drink, put the video on pause if you need to go. And it's really good if you can sip that water all day. Okay, now we'll get on to learning about financial statements. So the profit and loss statement is called a few different things. It's profit and loss statements, P&L, income statement. But basically this is what your business is doing on a daily basis. These are the activities that are happening in your business. Balance sheet we'll do next week. So income or sales. Sales is when you have a product to sell. So that's when it would become sales. Income is more service or consulting. So this is the income that you receive when you sell something, or money you receive when you have consulting fees. So this is the money that you generate coming in. So we're just going to use 100,000 as an example. Now, not every business will have cost of sales. Cost of sales is, there's a few things that can go in there. Mainly, this is the amount that it costs you to either produce your product or to purchase your product. So say, for example, we have teddy bears. We're going to sell teddy bears. So that would be sales. Every time you sell a teddy bear, it will go into this amount here. Then how much it costs you to buy that teddy bear is going to come into this amount here. So it might have cost you $10 a teddy. So, you know, we've got a fair few teddies there that we've bought and sold. So the gross profit then is the amount when we have our sales less our cost of the product. So in this instance, we have a gross profit of 40,000. Now, if you were a consultant, you would not have the cost of sales. You would just have income. So you would not then have these two items in your P&L. Unless, of course, your wages are contributed to your income, but your tax and accountant will advise you on that one. That can be a bit of a tricky issue. But anyway, we'll just keep this simple for this exercise. Then in here we have your expenses. Now you need to check with your accountant again, because there are a few tax rulings as to what goes into expenses, but they are things like bank fees, accounting fees, filing fees, the amount that you would pay the ASIC. We've got telephone, electricity, rent, wages, superannuation for Australia, motor vehicle expenses. But if you purchase any capital items like a printer or computer, or you might buy a building, your office space, those go into the balance sheet. They are not expenses. So expenses are what is contributed to help you to make this income or these sales. And you do need rent, phone, electricity, motor vehicle expenses. So that then goes into these, and you would list them all out. And then, for example, we've got 30,000 there. So then if you had income, it would, and to arrive at your net profit, it would be income less expenses equals net profit. But when we are selling teddy bears, we've got sales less the cost of goods sold equals your gross profit, less your expenses then would equal your net profit. So to make this example very easy, we've got 100,000 for sales or income, $60,000 for cost of goods sold, gives us 40,000 for gross profit. Now, we look over here, we've got some ratios. So in this example here, we divide the 40,000 into 100,000, gives us 40%. Now, these ratios here vary on the different type or whatever your business is, and you need to get a feel for what that needs to be for you. But basically, if your teddy bear costs $60, then you're selling that teddy bear here for $100. Is that the correct market? Is it competitive? That's what you need to ascertain. Then we need to keep our expenses in line so that we do make some profit down the bottom here. And you need to work out what percentage or what amount you want at the bottom line to be able to work out where you want to be when it comes to your budgets. So in this example then we've got 30,000 expenses, which is 30,000 divided by 100,000 equals 30%. So 30% of our income we are spending in expenses. So that leaves us with 10,000, which is 10%, which you need to work out whether that is appropriate for you. You know, what figures do you have in your profit and loss? Is it working well for you? The other thing that's really important that I find in here is to include your wages. A lot of people don't value themselves and leave that out and leave only what's left on the bottom here for their wages. Really need to work on that one and include some wages into this figure here. I hope that helps. If I can be of any more assistance, just give me a call. Thank you very much for your time.